It is, let's see, Tuesday, July 29th. I got a lot to come up. There's a lot. It's going to be an AI heavy show. Artificial intelligence. That's what the market's about. That's what this show's going to be about. I am going to dig into, for all you yield chasers out there, YMAX to 60% yield, paid out weekly. I'm going to dig into it. Do you want to hold it? Well, I'm not going to say yes or no. Again, that's your decision. I'm just going to show you what I did yesterday to go into that analysis. We're going to look at AI through TrendSpider. I am showing you right now the Comet browser, which is Perplexity's browser that's built on top of Chrome. It is phenomenal. We're going to go over Sidekick from TrendSpider, which again is an AI. We're going to go over all the earnings. We're going to go over some catch-up plays. We're going to go over why I am called the discounted Steve Kress, because the paid newsletter is half the price of what Seeking Alpha is. And I gave you at the beginning of the year some killer picks. Again, as part of a portfolio that I said would beat the S&P, I'm going to give you two of those stocks that are beating the S&P. One just reported earnings today. We're going to go over all the earnings because Boeing is now a really good stock. Celestica killed it. We'll go over, again, the pick that I just made. We'll go over a couple more, like Royal Caribbean. SoFi is up 10%. So we got a lot to go over. But you want to know, I think we may be at a top. And you want to know, Kramer always defines the top. And yesterday, this fucker, he dropped the F-bomb live on CNBC. And you would have thought, the World Trade Center was attacked again by the reaction. He says, what the fuck are we doing? And go and watch this clip. I mean, we got a keeper right here. Again, instant classic. An instant classic. And maybe that identifies a top when he dropped it. So, and I did listen to the Risk Reversal podcast yesterday while out on my walk. This was interesting, and it's Joe Terranova talking about blind luck. If you're long something that goes up, again, sometimes it's blind luck. But when you start touting yourself as some type of genius, that typically comes at the top of the market. And we're seeing a lot of people starting to talk themselves about being genius. My portfolio is not beating the S&P yet this year. I'll be perfectly clear with you. It is not. But what I know why. It's because of Apple. The Qs are up. If I were just in the Qs, I'd be killing it right now. But Apple, year to date, it's not doing well. This top right here, that's the beginning of the year. Are we going to turn around? Maybe, maybe not. But that is 50% of my portfolio. And that's hard to recover from. So let's talk about the newsletter a little, because over the weekend, I used Perplexity stock as a picking tool. Okay. I use AI a lot, and I wrote this newsletter, Unlocking AI's Power for Stock Trading, Finding Winning Stocks and Cryptos. I found a stock using Perplexity. Okay. TrendSpider is announcing later today. I think it might be later today. It might be later this week. This is an exclusive. They're going to launch Sidekick. Up here in the upper right corner, you're going to see Sidekick right there. Okay. I used it a little bit yesterday. I asked it a trading strategy for Target. Gave it to me. I asked CRDO if it's a good time based on my 4-hour algorithm to buy CRDO. I also asked it, hey, UNH, is it a good time to buy UNH? Okay, Sidekick can analyze watch lists. It can add annotations directly on your chart. We saw that with Mike saying, hey, add the Pelosi buys to this stock, and it did it on the chart. Analyze backtest results. It can analyze the backtested results for you. So say you know nothing about backtesting. It can do it for you. Summarize fundamentals or seasonality trends. It can find patterns, insider government trade, and unusual options activity. It builds comparison charts and tables. Highlight what's happening now. Again, one of the things that I pointed out yesterday, this What's Happening Now tab right here, it is phenomenal. It has all the tools that you need in it. Okay, what data can Sidekick access? It uses a wide range of TrendSpider's data, including price history, fundamentals, earnings, dividends, and stock splits. It uses everything. Let me give you 4 examples that they sent over to me, and I can't publish this because I'm not allowed if I'm, so listen up, okay? Listen up to the 4 examples. What's worth the attention in my portfolio today? It will ask you to select a watch list, and then it will summarize a lot of stuff going on with those stocks, including price action, news, analyst actions. You can explicitly ask it to pay more attention to certain things, or you can be intentionally broad, and it will whittle it down. What is currently going on with Palantir? Here's another example. It will take most or all the data we have for this given stock ticker and give you a summary. Often highlights things you might overlook as a human. Okay, again, this is all Sidekick. Third example, what is my current chart telling me? It will literally take an image of the chart that's on your screen along with some internal metadata and tell you what you're looking at and what indicators on your charts indicate, aka what is the meaning of this chart. It can also see your annotations on the chart and it can relate them into analysis. For example, the other day I asked about one of my holdings and it was like, the thing has dropped on news about X and Y, but analysts stay steady and provided your entry, you're still doing good. That's because I've had an entry level marked on my chart. Again, this is all Sidekick. It's all AI. Paint important points and levels on your chart. It can paint certain kinds of annotations. That's what this is. So if you want that type of analysis from AI, TrendSpider has it. And say TrendSpider, how do you sign up for TrendSpider? Well, you go over to Linktree and it's the top link. $50 a month. That ain't bad. Sign up for a 2-week trial. Once this thing comes out, give it a spin because the 2-week trial is going to tell you what's good. If you don't use it, don't extend your trial. But if you do find it helpful, go and get another plan. You get the 4-hour algorithm with an annual plan. I think the annual plan is the only way to go because after 2 weeks, you're not going to create a habit. And I love this program so much. Now, what you're looking at here on your screen is the Perplexity's Comet browser. I installed it yesterday. AI is changing investing, okay? And I wrote about this. In this newsletter. Unlocking AI's power for stock trading, finding winning stocks. I found a stock using Perplexity. You can change, and you can change with the market and start using AI, or you can stick to what you're doing. I don't personally care. None of these things are ever going to guarantee you success. It's like a college degree. A college degree doesn't guarantee you that life is going to be easy, that you're going to become, you drop out of college because you heard Mark Zuckerberg did it. It doesn't guarantee you're going to find Facebook and become a billionaire. But it gives you an edge. Okay, him going to Harvard gave him an edge. Again, the competition is you versus the market. The market decides who wins and loses. You don't. You take the chance. I'll get an official launch date for Sidekick. Consider subscribing. If you are a subscriber and you don't have Sidekick, but you subscribe to TrendSpider, send me an email. I'll send your email over. We can try and get you a little bit early access, but again, it should come out to everybody. By the way, yesterday, I used Perplexity to do a full portfolio analysis, which I will not share here because I don't share my portfolio. But if you haven't done this yet, I would suggest you do it. I may share the steps that I went through yesterday. It was eye-opening. Now, it tells me everything that every other freaking analyst tells me. You have too much Apple. You have too much Amazon. You have too much Microsoft. It tells me all of that. But it went into a little bit more detail because I said, hey, what's a good opportunity? It said, are you open to international? And boom, it gave me international things. So let's talk about the stock market now. Novo Nordisk. It's a mess. It's an effing mess. New management. Is it worth betting on this one? Or is it worth just going into Lilly? Again, I think it's still a GLP-1 market, but the market may not be as big as we once expected. Maybe people aren't willing to jab themselves in the stomach, to lose weight. Maybe people just want to eat less. Maybe people want to exercise more. Maybe people want to eat better food. And the drug, the side effects of these things, there are side effects. It's not, all of a sudden you lose weight and then everything's good. People go off and gain weight back. And it's about lifestyle. So maybe we're learning that because Novo Nordisk pulled their guidance and they named a new CEO. But again, am I getting into this one? On a weekly chart, this has lost momentum, and momentum is what's driving this market. Whereas we have Eli Lilly in the core portfolio. Has this one lost it, or is this one just basing to go back up? Their earnings, August 4th. It's coming up. It's coming up next week. So is this a precursor to the Lilly earnings? I don't think so. I think Lilly's in a better position. But again, you never know. You never know. Want to know my secret weapon for finding stuff? It's Seeking Alpha's quant rating. I thought this quote was fantastic from Peter Lynch. If you don't study any companies, you have the same success buying stocks as you do in a poker game without looking at the charts. Again, if you don't study any companies, you have the same success buying stocks as you do in a poker game if you bet without looking at your cards. That's the quote. That is a fantastic quote. And would you go into a poker game saying, yeah, let me just put the money on this thing? It's like spinning those damn wheels. You see those people spinning the slot machines in Vegas. Oh, I got a strategy. I know I've got a strategy. No, you don't. You're just gambling. So understand what is telling. Listen, I brought this up earlier in the year. The one thing I've learned about financials over the year is when the book value is more than the share price, you want to buy the stock. And I brought that up over and over and over again. And here, FinViz, this is a free website. You don't have to even subscribe to it. You can find the book value of whatever financial stock you own. That's it. 106.94 is Citigroup. When did I bring this up? I brought this up when it was around $45. Might have been 40. I've been bringing this up that this is a recovery, okay? Is Novo Nordisk going to do this? Maybe, maybe not. But just fundamentally, this is a $106 stock. You're trading at 95. It is on recovery. They've already had their earnings. Their earnings were good. That weekly candle of the earnings, you opened up at 86, you closed at 93. That's an 8% week. That is fantastic. It is a bank that is in recovery. Now, I don't own this one. Full disclosure, I don't. I didn't listen to my own thing. Again, but my advice was sound. I didn't even use Seeking Alpha. I didn't use Wall Street's price target. And it's doing it again. I didn't use any of this stuff. Okay, because I'm using the Perplexity Browser, Seeking Alpha thinks that I'm a bot and scam. So I might have to stop this and kind of edit it. But here's Seeking Alpha, okay? It's a hold in the quant. It's a hold in the quant. And it's been a hold for the whole time. And why? Its profitability has sucked. They are changing things. This is a bank that is in the middle of a change. Okay? And old and forgotten, Abercrombie and Finch, ANF. Abercrombie and Finch was up 6% yesterday. Why? Primarily because JP Morgan raised its price target for the company to $151. $151. The average price target from Wall Street is $113. This may be one, it's in the watch list, but it might be one to keep an eye on. Again, Abercrombie and Finch. Now let's go look at the 4-hour algorithm. Does this work? Well, you just had the golden cross of the 50-day crossing the 200-day. The buy from the 4-hour algorithm was 79. That 139 right up there, where's that? That's the previous March 2024 high where it pulled back. That's going to be a target because, again, what's the average price target? 113. What'd they just bring it up to? 151. JP Morgan, Abercrombie and Finch, they have their earnings coming up later in August 25th. Put it on a watch list. Now, BMNR. Kathy Woods, they doubled down $50 million on BMNR. Okay, $50 million. We're just going to go over BMNR. Let's look at this one because, again, it was down 11%. It's down 10% in the pre-market. So I went to Perplexity. I said, why is it down? Technical weakness, profit taking, routine corporate disclosure. No major news impact. And then what happens? They announce a buyback of $1 billion. Didn't bring the stock back up. The stock chart is messy as could be. This is the Tom Lee, where he's the chairman of this. They're buying Ethereum. That's where this one popped all the way up to 661. You don't have any entries in the 4-hour algorithm. Full disclosure, no entries. So there's nothing there. So you want to know what I did with TrendSpider? I said, well, let me find a better algorithm. Well, here's the 65-minute algorithm. You make 176%, okay, versus 366. That's still pretty good. Has you out. Wouldn't have held you in, had you out. Let's look at the 1-hour stock battle, okay? This one makes you 73% versus 362. It has you out. Again, the point is TrendSpider can try and keep you out of these things. As long as you have decent strategies and you set them up, TrendSpider can help you. Charting can help you. Make sure your charting program can help you. And again, $1 billion buyback. They're buying $1 billion of their stock back. And this one, the market cap is $1.44 billion. They're going to buy back $1 billion. It's a MicroStrategy for Ethereum. So just be aware of what you're buying. This, you can trade it on momentum all you want, but understand what you're buying and selling. Now, autonomous cars, Morgan Stanley sees self-driving cars hitting $200 billion by 2030. There are 3 companies in this autonomous vehicle economy right now. It's Tesla, Google, and Uber. Those are the 3 companies. And Tesla, if you believe in Tesla, again, is LiDAR good? There's a whole bunch of stuff out there that Elon is right. Okay, about cars. This is it. What do I know about technology? You want to know something? Because Elon famously said 6 years ago that LiDAR is a fool's errand, and many at the time were skeptical. Basically, LiDAR is a 360-degree radar that scans it like in milliseconds, the environment. And Waymo has LiDAR. It's expensive. Elon said, I can do this with cameras because your eyes are cameras. I can just train an AI to see what it sees. And Waymo all over Atlanta, they're stopping in intersections. So, is Tesla the play? Is Waymo the play with Google? Or is Uber Which one? I own all three. I own all three of them. I like this industry. So I don't need to pick a winner. I've got far more Google than I have Uber and Tesla. And you want to know why? Because I believe in Google as a conglomerate of a business. They have so many tentacles and they're winning the AI race. We just saw that with their earnings. So I like that one. So again, Elon famously said that. Go and pick your winner. Now, let's talk about this one. Is this a good risk reward for Target? Now, down at the bottom, you'll see here, trailing PE is 13 times. And you can see it if I just shrink this down. You know, I got the bottom of my screen cut off, but 13 times, that's the trailing PE. And you see this wedge on the monthly chart. So let's go and look at Target. Is this a good one at this price? Let's just go and look at a monthly chart. We're going to go and look at the exact chart that they're showing right there. Okay. I drew that trend line that they drew. You have 15% to get there. Okay. And we're starting to see the price action use this 200-day as a support. While the MACD is low, while the RSI is significantly low, is this a good catch-up trade? Well, I don't know. I don't like Target. I don't shop at Target anymore. I moved to Walmart. So for me, it's not a good risk reward. For you, maybe. Maybe the short-term trend is up because you can see in the 4-hour algorithm, if we just go back to the 4-hour algorithm, does it work? No. But the 4-hour algorithm had you in here at $97. You're seeing a golden cross, that blue line right there. That's the 50-day. That red line, that's the 200-day. So the 9, the 21, and the 50 are in an upward trajectory for short term. But long term, we are still in a downward trajectory. Still, this is a weekly chart. And that's the line that I drew. It comes over there. Where would I expect this to get up to in a good, if management was actually performing? I'd expect it at 181. Why? Because that's been resistance. That's been resistance. So it would be a great move from 106 to 181. I don't think you get there. You want to know one that did rebound? SMCI. This one's crazy. This one's up, let's see, it was up 10% yesterday. Let's see where the 4-hour algorithm has you right now. Up 78%. Okay, SMCI was up 10% yesterday after the podcast. There's another one that was up. It's called Vape. Okay, VAPE. This was up 549% yesterday. So I went and I used AI. I said, why was Vape up so much yesterday? Due to announcement of a massive $500 million private equity investment. Dramatic strategic pivot into cryptocurrency. It's hype. It's hype. Okay? If we go and look at Vape now, is Vape up? This is how you trade momentum. It's down 12%. But if you made 548% yesterday, okay, we can go and look at this. Was there an opportunity to get this? Well, let's go look at a 5-minute chart yesterday. Look, if we just pull up, we're going to pull up after hours as well. If we pull this up, yesterday it popped and it stayed there. Do you see opportunity in this chart? For me, this wouldn't be worth it. The only time that this would have been worth it is when I found confirmation. But it's messy. And this doesn't deserve my money. You know, that's a great 30% move in 35 minutes, but you better damn well know that's hard to time. That's hard to see. You've got to trade it effectively. Now, I'm going to go into a high yield one right now. You see on your screen yield right here. Dividend yield trailing 12 months. This has a 60% yield. This is YMAX, WMAX, Universe Fund of Option Income ETFs, okay? Let's just look at this. Let's go over to TrendSpider, and we're going to use the 4-hour algorithm on YMAX. Okay? 4-hour algorithm gets you in. You can say, well, the April low. Let's just talk about the April low. Gets you in April 11th at $12.20. Say you had the 4-hour algorithm and you wanted this. So you get in at $12.20. Okay? And you held on to it because it just got you out. And you're saying, you know what? I'm just not sure I've made enough money. During this time, you got paid $2.56. So from April there to there, you got paid $2.50. That's 21% over that short time in just the asset, meaning the stock price. Or I'm sorry, 21% is the actual dividends. You got 13%, and it's not annualized. This is actual return. So it's not annualized. You got 24% in dividends. You got 13% in the actual asset. That means you got 34% over this time. Sounds great. Just look at it from January. Because January, if you got in up here in January, up here at 17, let's just say you got in at 17.45. Okay, January 3rd. Say you held to the bottom April 8th. That's 11.50. That's a 34% loss. And you might say, well, I got dividends. During that time, you got $2.34 in dividends. That's 13% yield off of that 17.45 buy. So you lost 21%. Again, the point, you will see all of these huge yields. You will see swings in a stock that pays a dividend. The dividend is taken out of the stock price. If you go and look at the dividends on this one, and we go look at the dividend history, it's paid weekly. Okay, it's paid weekly. There is a reason for this. And there is a reason why I will tell myself no, and why I try and ask people what you want. Because there's different choices. This doesn't fit my goals. I don't need income. If you're going to ask me if I like this one, I don't own it. But someone may need weekly income and they're okay with the risk. Go and do the math. You don't know what it's going to trade like. You don't know the future of this actual asset price. You don't. Okay? In comparison, you go and buy $10,000 of US Treasury bond at 4% yield. And you're saying, well, that's not as good as 60%. Well, you're not taking risk. But at the end of that 10 years, you've earned 4% every year. Every year you've gotten 4%. And at the end of that 10 years, you get your $10,000 back. You don't get your $10,000 back if you put it in here. You've gotten your dividend. When you sell it, you can get your $10,000 back. But you don't know if it's going to be an upper left to upper down bottom right. You don't know if it's going to be a bottom left to upper right. You just don't know. You're taking risk. So whether I like this stock, whether I like this strategy or not, that's not for me to decide for you. If it fits your goals, that's your goals. So rather than asking me if I like it, go and do the math yourself. Go and take AI for a spin. Ask it. Now there's a new one called SSK. Okay? This one takes the staking revenue from Solana and it pays it back to you. It's an interesting. If you're interested in this, go and do the research. But again, this one sounds a lot better to me than those YMAX and stuff like that. Again, if it fits your goals, then go and do it. Don't come and ask me, do I like this one? You need to do the math for yourself. If you like it, then go and get it. But if I like it, it doesn't make a difference. You know what I like? I like Apple. I like Apple. Just had the golden cross here, right here, July 25th. But do I like it in going into the next months? Let's take a look at the seasonality. I'm going to go back to 1994. August and September are lower than July. Do I want to trim? No, I'm holding. But the time when I want to buy is September. And I may load in September. Remember, You get a new iPhone in September. If they announce some major Siri update, this one's going to fly. Now, let's talk about some earnings here. Because Boeing, this is a changed company. The earnings today were amazing. Okay? Boeing, earnings per share, they lost $1.24, but that beat estimates by 7 cents. The revenue of $22.7 billion beats by $980 million. It's up 1.84%. Year over year, this stock looks fantastic. It looks amazing. Okay? It's moving back towards where it was. And 10 years ago, you can see 10 years ago, this was back in 2019, it was a $440 stock. You're not making money in this stock, okay? They are not making money. It's moving back towards a cash flow positive and profitable company. This probably should go back in the core portfolio. Again, this quarter was that good. They have slashed their losses. It's at a 52-week high, $236. You see it right there. Okay? It is nearly doubled from its lows. Look at the lows. Back here, 144, 129, somewhere in that neighborhood. 128 was the low. So what's 128 times 2? 260. It's trading at 240. It'll get there. The trend has changed. Okay, we talk about target and stuff like that. This is a weekly chart. Where are you going? Well, you got a nice gap up here. Let's see. Gap is up to 244. Where are you trading in pre-market? 240. We're going to cover the gap with a good earnings. The trend has changed. And that trend line, that trend line right there on that weekly, that's anchored at the COVID lows. And it just used some stuff, okay? It's well below where it is right now, but it's been used as support several times. Remember, there are only 2 companies in the world that actually make planes, and this, Boeing, has a defense portion. And that's entrenched in the U.S. government. It's not going anywhere. It's about the management. When the management changed from a bean counter back to an engineer, and Elon even said it was a good thing. So maybe you're going up for this $400 gap right here that was created way back when it went down, March 2019. So again, keep it on your radar. Keep an eye out for it. This isn't a stock that's going to double, but it's a slow, steady mover. It's one that you can put in your portfolio. And if they add that dividend back in, it is a killer. Now, one that is absolutely killing it, a big holding of mine. A top 2025 stock, an alpha pick portfolio stock, Celestica, was up 10% on earnings. It's up 7.34%. It's still a strong buy in the quant. Do your research on this one. Go and look at it. They just had their earnings this morning. This one is in a crazy move on the 4-hour algorithm. And again, this is one of those stocks that I add to as it wins. It's adding to a winner. And it's still a strong buy in the quant. Again, do I have to say that again? The quant is my cheat code. The quant in Seeking Alpha is an absolute cheat code. When did it go to a strong buy? Let's just look. I mean, this has been a long buy. Let's see, 3 years. It went to a strong buy way back here. Let's see, that's a hold. $10. You're trading at $186 right now. $186. Let's just push this up to 186. It's off the chart right there. Let's go. 144% gain. This is just, again, it killed a top 2025 stock. So if you subscribed to Seeking Alpha, okay, you got this in January. If you subscribed to Alpha Picks, you got this as a pick. Okay, and if you had the bundle, you were able to take the CLS pick as a top 20 and research it and then realize it's probably going to get added to Alpha Picks. Oh, and by the way, yes, I bought the dip down here and I bought it up here at 127. Both are still looking like a good buy. By the way, I will bring this up as well. If you're going to subscribe to Seeking Alpha, you may want to subscribe to the paid newsletter. Want to know why? Because I gave paid newsletter subscribers this one back in January, Corning. Okay? What did I say? I said back in January, this one was going to have a great year. My theory, Corning makes the glass for fiber connectivity. Guess what connects data centers for all of this AI? It's fiber, okay? GLW, it's a buy. It was a strong buy, but it's a buy. Let's just look at year to date. You're up 23%. Let's chart that against the S&P. Year to date, boy, this one's up 23%. It's up 7% today, 7%. It's up at 58. I personally own this one. I think at like 40 something. I just put it in there. It was a bet at the beginning of the year. I liked it. It did dip down. You can see it dip down. It dipped down quite a bit. But it was one of those small buys that I did at the beginning of the year. And I said, you know what? I like this stock. I like the company. It was somewhere in the 47 range that I bought. And I lost money on it, but now I'm making money. Again, my thesis didn't change. It's still a stock. Did I add to it? No. Should I have? Probably. Just for shits and giggles, I'll tell you. Another stock that I gave to paid newsletter subscribers was TLN. TLN. Year to date, this one's up 79%. You want to know? And I say this with all due respect to Seeking Alpha. You want to know how I found this one? I literally went to VST because that was the big winner last year. And I said, let me look at this one because it says it's number 2. Down here, you have the quant ranking. This one, VST, said it's number 2. What's the number 1? And back in January, this was the number 1. Okay, year to date, up 79%. Call me the budget Steve Kress. Because here's the thing. The paid newsletter, it's half the price of Seeking Alpha. But again, I will tell you, don't go and buy my newsletter instead of Seeking Alpha. Go and get Seeking Alpha. I'd rather have you have the tools than pay for my newsletter. One that's taking off that I put into the watch list is SoFi, up 17%. And yes, this morning, if I was trading, somebody asked me, why aren't you scalping? This is one that I would have absolutely scalped. You want to know why? It had great earnings. And look, you could have gotten into this when it announced earnings right here at 7 o'clock. You could have gotten in at 22. You had confirmation. You still have confirmation at 24. That's a huge move. This one, getting ready to move. Let's see how it works on the 4-hour. Well, the 4-hour algorithm makes you 101%. You may say, oh, but buying and holding makes you 101%, 114%. Use this as the entry because right now, that $13 entry over 54 days, it's up 83%. This is a great name. It's taking off. And I don't want you to think I only talk about the good stuff. Again, SoFi, they raised their 2025 guidance. This is where it takes off from. I still like Robinhood better, but that's a great one. A bad one? Royal Caribbean. Their Q2 revenue falls short of what Wall Street had, but this is up. Understand that because of Carnival Cruise Line's great earnings, this one ran up even more. And so are you going down? Yes. But even if you bought this at the beginning of the year at $222, you're still trading at $328. Remember, buy long-term, hold long-term with good companies. And that's what Seeking Alpha gives you. And that's why I say get the bundle. The bundle with premium and alpha picks, it is the perfect place to be. It saves you $159 this bundle. Go over to my link tree, and it's the second link. The two that I would get are TrendSpider and the bundle. That's it. If you want my newsletter, it's a bonus. Support me because you listen to me. That's it. And now what do I usually do? If when I was trading, I would use TrendSpider and go through the scans. FBCG, which is a blue chip growth fund that is in the core portfolio. I like this one. My dad owns a bunch of this. Okay, this one just got another leg up in the 4-hour algorithm. Over the past 2 years, you've made 77% on 20 positions over 24 months. You're not even trading once a month. You win 45% of the time on this one. It's a great fund. Is it the best? Probably not. You can find better funds. One that's in the watch list that just got a buy. Affirm. They've got their earnings coming up later in August. It's not now. You're seeing that $73 providing resistance, and it's just flattening off. But with SoFi and others doing well, maybe Affirm's going to do well as well. AIQ, which we just talked about the fund. This one is artificial intelligence. The 4-hour algorithm got you in way back here, April 10th at $33. Where are you trading right now? $45. Again, for a fund, that is phenomenal. The 4-hour algorithm makes you 63% versus 52%. There are a lot more. One that you guys may love that just got, again, I sold out at about 470. Boy, 4-hour algorithm gets you back in at 470. Their earnings are coming up. This is CrowdStrike, August 27th. Is this a great buy? Well, look at the weekly. The MACD is still elevated on this one. It hasn't reset. Am I going in and pouring into this one again? No, I think there's better opportunities in this market. This one has run a lot. Its valuation a little bit crazy. One that got one that is the top large cap stock, I think, in the quant is Micron. Go and do your research on Micron. I don't own this one, but it just got a buy in the 4-hour algorithm. And when you look at the 4-hour algorithm, this one makes you 122% versus 70% if you bought and held. 23 positions over 24 months, you win 52% of the time. And you take a look at this weekly, and its support level at 97. How did I get that support level? It's just a previous all-time high that goes way, way back. This goes way, way back to like 2000. Yeah, 2000. 2000. Imagine holding this stock from 2000 to 2025 and just getting back to even. That's what happened. That's what happened. So again, do your research, understand that AI is a game changer, understand it's coming to TrendSpider, understand they already use it over at Seeking Alpha. I assure you of that. And go and get the Perplexity browser. I like the Perplexity browser. Other than this damn thing, bouncing me out of Seeking Alpha because it thinks I'm a bot. So if you have any questions, again, Linktree is where to get me. You can get me on any of these platforms. Or just email me or sign up for the newsletter and just reply. Just reply. That's it. And if you want to chat with me one-on-one, you can up here if you're a paid subscriber. Again, considering paid subscriber. Just support me because you listen. Again, an hour a day. The reason I don't scalp anymore is because I do this. And my response to the person on Spotify was, hey, I don't scalp anymore because prime scalping hours are between 6:30 and 9:30. Guess what time it is right now? 9:39. I've been putting this show together since 6:30. I would make far more money actually scalping and trading. And I did. So if you have any questions, you can certainly hit me up. I'm an open book. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.